Today we're revisiting the company Kits. I actually got the glasses in the mail just today, so I'll be opening them up later on in this video and doing a quick review. But before this, we just got to talk about what Kits is as a business and what their mission is. They're a rapidly growing digital eye care platform that makes eyewear affordable and easy to order online. They offer a large selection of glasses and contact lenses and have their own custom frames, which those custom frames they have higher margins on. I went on Kits' website and it's pretty well designed, as well as they have other brands besides their own. They have higher end brands there like Ray-Bans, which really helps elevate their own lenses just in terms of from a marketing perspective. And the fact that they're like half the price or even a third of the price makes them a lot more tempting than going for the $200 or $300 Ray-Ban option. If you guys are new here, my name is Danielle, and here on this channel we talk about Canadian growth stocks. So if that's your jam, click that subscribe button down below. Also, if you want to see when I buy into Kits or if I have a position in Kits in real time, you can check out my Patreon group down below. If you're a beginner to the stock market, I've got a quick Skillshare course for you, which you can sign up for down below for free if you register today, and you can watch that entire course totally free as long as you consume the content within 14 days. Anyways, on with the video about Kits. So Kits is actually a very recent IPO. They IPO'd about a couple weeks ago. In their IPO offering, they are selling around 6.5 million shares for proceeds of $55 million. Really, $51.7 million would end up on their balance sheet, which later on you'll see it really will help them out. They describe the use of the proceeds, and $10 million is going to their lab facility, about $12 million is going towards sales and marketing efforts, $8.5 million is going towards paying back debt, which is a good thing. And the last $10 million is going towards working capital, just like general and administrative stuff and like regular business expenses. The share price that they IPO'd at was $8.50. And usually for IPOs like Airbnb or DoorDash, they immediately spike up by 3x or something like that. However, with Kits, they're trading today at $8.39. So the value of the stock actually went down after the IPO, and likely it's because no one really knows about this company as they're relatively new. The company started out in 2018, and honestly there wasn't much buzz around their IPO just because they're not a big tech giant. But because they're not a big tech giant and they didn't have that much press, I think this is a bit of a gem stock that no one really knows about, as I haven't seen anyone talk about Kits yet. So if you're wondering, Kits is available on Wealthsimple Trade, and they go by the name Kits Eyecare with the ticker symbol KITS. One thing that I like about this company is the fact that they have a large insider ownership. After the IPO, and if the over-allotment's exercised, the original Kit Eyecare shareholders will own about 13.2 million shares, and that equates to about 42% of the company. However, if the over-allotment's exercised, they'll own about 12.4 million shares, which is probably around like 40 to 41% of the company. In a company they acquired before IPOing, LD Vision, they own about 10.6 million shares, which represents around 34.4% of the company. And the total number of shares out there right now is around 31 million shares. So I'd say the public float is somewhere around 20% of the total ownership of the company. So that's a pretty tight float, which means that if there's a lot of buying pressure, this stock could really shoot up. Now, digging deeper into the insider ownership, we can see that the CEO has a very large portion of vested interest. He sits at around 27.4% of the outstanding shares, so he's very aligned with shareholders. As well as the CFO owns around 11.9% of the company. So between the CEO and CFO, they hold more than 30% of the company, actually almost 40%. On my previous video on Kits Eyecare, I talked about the CEO and why I believe he's going to be a huge factor in driving this company forwards. So it's a great thing that he's very knowledgeable in the eye care industry. However, it's also possibly a risk because if we lose him as a CEO, this could be detrimental for the business. So the CEO's name is Roger Hardy, and he was the founder of Coastal.com. And Coastal.com basically did something similar, but they're selling more so like contacts online. And I think he started the business in 2004 and eventually sold it off to Essilor in 2014 for a total value of $430 million. Kits free information today is valued at $260 million. And Coastal.com's stock price went from around like $4 or $5 on the IPO, and they ended up like in a hockey stick type of growth, selling off the company at around $12 per share. And the company that they sold to, Essilor, was merged with the largest glasses company out there, Luxottica. Before we move on to the business highlights, let's open up these pair of glasses. So we got a nice little card holder from them, and we've got the glasses case. And I remember seeing some members actually post on the Discord about the glasses case. I think this is the cheap one because it doesn't even have their branding on there. They have a better case that was posted on Discord. So these are the glasses, and it just comes with a microfiber cloth. So that's pretty much all that comes with the glasses. So these are the pair of glasses, and they fit on my face. They're a little bit tight around the side, but there's probably some adjustment that I can do with the glasses. In terms of actual vision and if I'm able to see well, yeah, I think that I can see, the screen on my camera right now. I can read all the words very clearly. So I would say there's no problem with in terms of like the visual quality. I do see some blue dots right now, but maybe that's because the glasses are dirty possibly. Yeah, there's a little bit of dust. So there's still a few blue specks that I can see right now, but maybe that's because my lights are bouncing into my eyes. So I've walked around with them a little bit and it feels a little bit dizzying, but maybe I just have to get used to it. So I think for my initial review, I'd say that these glasses are, they actually correct my vision quite well. However, when moving around, it's a little bit different. I feel like my head is a little bit spacey, but maybe I just need to do some adjustments and just get used to it over time. If you want to hear more updates with my experience with Kits' glasses, you can sign up for my Discord down below, which is entirely free. Now for some business highlights. Kits has been operational since 2018. Since then, they've sold about 65,000 pairs of glasses in 2020 alone and 8.7 million pairs of contacts. They estimate their customer acquisition cost to be about $40, and the lifetime value of the customer, get this, it's $600 per customer. So basically, the return on investment is about 15 times their initial investment. For this next part, remember to keep in mind the company is valued at $260 million. First off, the total addressable market is $35.2 billion for the entire eye care market, while the contact portion of the market is $7.2 billion. This is within all of North America, not the world, just North America. So that's a massive market for a company that's only worth $260 million. Currently, the company produces around 2,000 pairs of glasses per day. And if we assume they don't work on weekends, and there's about 200 working days in the year, 200 days per year times 2,000 glasses per day equals to about 400,000 pairs of glasses per year. That's at their current production capacity. And if we were to do some simple math and assuming that they earn about, let's say $100 per pair of glasses, and their cost of goods sold is around $20 per pair. Then they'll make about $32 million in gross profits. But if we look at their financial statements, their margins are pretty low. And that's because Kits is running a lot of promotions right now. So these pair of glasses were discounted very heavily. I paid about $58 for them, when original price is probably about $180 per pair. But the assumption is as they grow bigger and bigger, the less discounts they're actually going to have to offer because their brand has some sort of value out there and customers trust them. So with $32 million in gross profits and a market cap of $260 million, it's not that impressive. However, their glasses business is actually ramping up production to make about 10,000 units per day. So we can multiply these gross profits of $32 million by 5 and we get roughly around $160 million. Now that number is a little bit more convincing as to why Kits is an interesting investment. And that's only on their eyeglasses portion of the business. On their contact side, if they're able to sell 8.7 million boxes of contacts, their contacts go for about $11.99. That would bring in revenues of $104 million. So adding these two together, basically the revenue is around $264 million for a company whose market cap today is $260 million. So you can see the future PS ratio is under 1. But this isn't like a typical high-tech growth stock that's a software company, so maybe a PS ratio of 1 is reasonable. However, when we look at the growth numbers later on, you might think that this company is relatively undervalued today compared to where it's going to be trading at later on in the future. Looking at the revenues, we can see that for the 3 months ended September 30th, they made about $20 million in revenue. For the 9 months ended September 30th, they made about $55 million in revenue. Remember, this is a company that's only 2 or 3 years old. They made $55 million in revenue. They also had gross profits of around $16.6 million for the 9 months and $5.9 million for the 3 months. And the margins are roughly around, I think I calculated it out to be about 30%. However, I think the margins could be a lot higher once they stop running their discounts. And the reason is, there's a stat out there saying that glasses cost around $14 to actually make, and then they retail for like $129 on Kit's site. That's not including the coatings that you can add and the extra special features, which would probably bring it up to about $160. Once they slow down on these promotions, the gross margins will skyrocket up. Looking at some of their expenses, we can see that marketing has more than doubled in the 3 months, as well as in the 9 months it's more than doubled as well. So we can see that Kits is spending a lot more on marketing to be able to capture more market share and just get their brand out there. On the fulfillment side, the fulfillment expense doubled. However, revenues didn't exactly double. But this may be the fact that they have to just do more hiring of people and there's a bit more overhead costs with fulfillment. But it's not too big of a worry right now. In terms of the bottom line, we can see that in 2019, they actually made a net income of $285,000. And for the 9 months last year in 2019, they made a net income of $132,000. However, in 2020, they're still making a loss right now, which is understandable. But their cash flows later on, you'll see they're positive, which is a good sign. Looking at their balance sheet, we can see that they have total current assets around $8.8 million. However, their current liabilities sit around $12.7 million. And this is usually worrying from an investor standpoint. However, the fact that they just got a cash infusion of $51.7 million, it's not worrying anymore. They've got a current ratio of just under 5 with that new cash infusion. Another thing that we should note on their balance sheet is that goodwill makes up $38 million, which is basically useless in my opinion. So really the company assets are around $15 to $20 million. We can see that the total liabilities are $48 million and they've got an $18 million loan. However, $8.5 million of that loan will be paid off with the IPO proceeds. In terms of cash flow for 2020, we can see in the past 3 months it was positive by $500K, and for the past 9 months it was positive by $2.6 mil. And this is a great sign to me, the fact that the company is generating cash from their operating activities. The cash flow from operations has also increased by just over 60% from 2019 for the 9 months ended September 30th. However, they do have some other cash flow activities in the financing and investing activities, especially in the financing activities where they have negative cash flow there. And this is repayment of that $18 million loan on their balance sheet. What I find pretty impressive right now is the fact that this company is run by 49 people and it generated $54 million in 9 months. And they're expected to generate $74 million in this entire year. And typically their last quarter is their strongest quarter because that's when people are trying to scurry and use up their benefits before the next year comes around. So stay tuned for Kits' next quarterly earnings, and I will definitely be doing a review on that. Now for a few risks with Kits right now, it's the fact that they might not have anything that really differentiates themselves from other players out there besides their brand. So other major players are like Warby Parker or Zenni Optical, which have a very strong presence in the glasses market right now. So Kits is going to have to spend quite a bit on marketing and branding to really secure their foot in this market and become a dominant player. But the fact that they had about 69% of their revenues this year actually come from customers who made 2 or more purchases is kind of a testament to how customers relate to Kits. They are willing to come back and buy at least a second or third or fourth product from Kits Eyecare. So that's the one major risk that I've seen so far with Kits, is just the fact that they have nothing really to differentiate themselves other than, their own brand, which honestly every other company out there has. They are disrupting, however, not in a very unique way in my opinion. But I do believe they are the first e-commerce glasses company that has gone public. So if you believe that people are going to be buying glasses online in the future going forward, and this is going to become a more popular trend, then take a look at Kits and do your own due diligence to see if it's worth investing. Subscribe to my channel as I will be revealing my Wealthsimple portfolio and any new moves that I've made in there sometime later in February this month. If you want to check out my previous review on Kits, just going through their investor presentation, check this video out here. If you want to check out other growth stocks, check this video out here. If you're there, I'll see you there. If not, keep up the grind and have a great day.